Now, the big picture, I fully expect Bitcoin in the next couple of years, by probably around the halving, maybe 2025 is going to get to 100 grand. Question is, if you buy here aggressively on leverage, which is my background, you might get stopped out at 15.
Hey guys, welcome back to the channel. In today's video, we have senior macro strategist Mike McGlone sharing his insights on the current state of cryptocurrency and how the Federal Reserve's latest move will affect the market. McGlone predicts a bottom for Bitcoin, but acknowledges the past bottom prices have been painful and have taken several years to recover. He sees the current situation with Bitcoin challenging, but believes buy and hold strategies will be okay in the long run, as regulation will positively impact the prospects of the cryptocurrency market. McGlone views regulation as necessary to attract investors to the market and ensure long-term stability. He predicts that America will follow a similar path to Switzerland and Canada, and believes that the US economy is in need of a major correction. Let's get right into the latest interview with Mike McGlone, as he talks about his prediction for the price of Bitcoin and what we can expect next from the Fed. Before we dive in, don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
We will see 25. Now, that's just what's priced in the market. Fed funds futures show 25 basis points on Wednesday, a hike. Key thing to remember is the Fed is still hiking. Number one rule in market risk assets is they're taking away the punch bowl. Be careful doing anything but selling rallies, most notably in the stock market, commodities. Crypto's a little different world, but they're still hiking, and she expects Powell to sound hawkish. He's got no reason to be dovish yet. Why? Let the market do it for him. We are still seeing central banks hiking as the world is tilting towards recession. Now, you saw the latest, we pointed out, or downgrades from World Bank. Now, sometimes they're considered less, but it's still tilting that way. And basically, the Fed needs higher unemployment, unfortunately. But those are based on a lot of lagging measures. So I'll dig into my outlook a little bit. I just want to point out key things that I was way too early on last year and could say I was wrong. You get stopped out, and as a trader, is like Mark Yusko points out, as long as you make more money when you're right and stop yourself out when you're wrong, you do okay. I'm sure Dave can relate to that, and you can too, anybody who trades. When you make market pumps that much, beginning of the year, all this hopium, despite for kind of, I think, really less than robust reasons, just bouncing, then you have to be very careful. So that's my bottom line. And I think the key thing is, when I might get the High Connections conference this week, I have to moderate a panel on the investment outlook. I'm going to say, okay, start with what's your bias for the equity market. And basically, for everything to stabilize, you need stocks to go up. And that's bad for the Fed. It's bad for inflation. And I fully think it's more likely the stock markets continue to be in a downward market. Everything is going to follow except for bonds, gold, and eventually Bitcoin. And so looking forward, I fully expect we're going to get this bottom in Bitcoin. But if you look at the last few bottoms, they were very painful. It took 4 years to get above that high, from 2017 in Bitcoin. And then how many times did we bounce around 4,000 and with COVID to make it difficult? How many times did we bump up to 15 grand and go back down? It can't be easy. And if it's easy, something's wrong. But from the buy and hold types, you're okay, because I sense that this major event with what happened with Sam Bankman-Fried and what's going to tip with the regulation, if we want to go there, is going to be looked back upon as that's what the regulation, that's what we needed in this space for the adults to get in and say, thank you, we're in for the long haul. There's one thing I just want to, on the macro of that, is that the lessons I've learned is try to ignore things that I don't understand. Well, not that I don't understand, that I think are just kind of noise. Like the details of FTX are not going to shape my outlook for cryptos or markets or anything. And the details of regulation will, but I like to go back to what Churchill said. Americans will always do the right thing, only if they tried everything else. And that's the thing that I think people miss sometimes in the rest of the world, and they think they're weak. It's our strength is our open discourse, letting people like Elizabeth Warren and OCS point out the negatives of socialism brings on the typical American. It's in our DNA to say, no, we're not going to be idiots. We're all here for a reason. We're going to be more like Switzerland and Canada and Europe in this space. That we end up like China or the Soviet Union, and we're not going to do that. So to me, the bottom line regulation still remains the same. All you have to do is look on any measure and you see what's the top traded crypto, the dollar. Any American who thinks that's bad is just irrational.
After the Fed hiked interest rates by 25 basis points, this is now causing concern for risk assets such as stocks and commodities. However, the crypto market operates differently. He mentions that central banks worldwide are still hiking, despite the world moving toward a recession, as seen in recent downgrades from the World Bank.
I think part of that is there's few better motivational factors for Americans and American psyche than the sense of falling behind, the Sputnik moment. And there's only one person right now that's really the problem, and he's already over 2 years into his term. He might not last much longer at SEC, and the pressure is becoming overwhelming for Mr. Gensler. So we have to point out those are kicking in. He did authorize the first Bitcoin ETF. I have to admit it's not perfect, but you do get better returns right now because you're rolling into backwardation. Then you get the underlying. It's got a very nice attractive thing to it, and it's, GBTC is a discount. But I want to just go back to the technicals a little bit. One thing that I love to mention, the 200-week moving average. Getting to the daily, the shorter term stuff, it's the Bitcoin's never spent this much time below it, and that was bumping up against it. And that's the difference. That's what's changed. That's maturation. It's great. We're going to be talking about this more in the future. But I fully expect that at some point, if I'm right about, and it's also showing signs of what you said, Dave, showing divergent strength and becoming more of maybe a risk-off asset. But up 40% in the year is dicey versus the NASDAQ up, 10%? I mean, that's even this morning, Bitcoin since Friday is up fraction and everything is lower. So that's a good sign of that happening. But if I'm right about this typical recession, earnings drop 25%. That's very mild. It's normal. It happens. S&P drops maybe 50% from an all-time high. That's not normal. I mean, that's very normal. Then we're going to have a problem with all cryptos. But I have to leave you with this. I'm bullish Bitcoin, but I fully expect Ethereum's going to continue to outperform.
There's a Bloomberg survey, Mike, right here that I have pulled up that says that 70% of investors believe that the market has not hit lows, stock market, and that we'll see lows, and that 35% of them think it won't still be until the end of the year.
Darn, that's bullish.
I was going to say that's a hell of a lot of bearishness. I was going to say so maybe it is time to buy everything. I mean, 70% have not put in a low. That's a pretty aggressive.
Well, so this is the thing I'm afraid of. So what we've seen is that massive shakeout in the crypto market that's cleansed it. We got rid of some of the bad players, and some, unfortunately, innocents get hurt, but it really cleanses the market for a good longer term run. We haven't had that in the stock market. I mean, Dave and I've seen, the real ones. Remember the 87 crash, you remember all I can mention in the past, and all the little things the corrections that cleanse and make it a better opportunity for the long term. It hasn't had it. Orderly 20% because the Fed tightened the most in history. That's just too easy. And particularly if you look at how expensive it was historically versus so many measures, income, global stocks, sales, there's so many different things that I'd be disappointed if we don't cleanse it better, and be wonderful. It's just if we doesn't get that cleansing, and then it just means at some point it's still going to get it, because it always has some form of cleansing, and this has not been a cleansing. This has been an orderly bear market. I like to point out, look at that VIX. It's been going down. I mean, up its mark late, but it started going down as market's going down, because every single time it went lower, it went closer to those concentrated put strikes. Why? Because everybody's buying puts. I mean, because of what you said, that sentiment.
McGlone cites technical indicators, such as the amount of time Bitcoin has spent below its 200-week moving average, as signs of market maturity. He predicts a mild recession with a typical earnings drop, and sees Bitcoin performing well as a risk-off asset. A recent Bloomberg survey shows that 70% of investors believe the stock market has not yet hit its low, with 35% believing it won't reach its low until the end of the year. McGlone sees the recent shakeout in the crypto market as a cleansing for a longer-term run, unlike the stock market, which hasn't had an orderly correction since 1987. He also predicts a future cleansing of the stock market to get rid of bad actors, just like we've seen in 2022 with crypto. What do you think about Mike McGlone's price prediction for Bitcoin, and where do you see the crypto market at the end of Q1? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.